Hey guys, it's your big dreamer and doer G Dinero coming to you today with another breaking down the trade. This time it's Invest Answer Circle, January 15th, 2027, 150, 140 synthetic long. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So let's dig into the trade. This was the trade alert that went out yesterday from Invest Answers. As you know, I tried for nearly a day to short circle at 270-ish, couldn't get a fill. Well, now at 150, it looks like it's bottomed. In addition, at this level, it is fairly priced for two reasons. Note, he did give more than two reasons, but that's cool. It mints money. Its revenue and earnings growth are on fire and very bullish for the next 3 years. Stablecoins are going to explode under the Genius Act. Most of USDC is now minted on Solana, and IADSS on the 4-hour chart was golden so far. This will become a three-legged stool. That means he'll start selling covered calls against it at certain points along the way. The stock was about 156 at the time. The OT is about to turn up. A buy signal's flashing on the 4-hour. Mean reversion also bottomed. And then he put my trade. I did another synthetic long for about a $3 to $4 net debit, buying the 150 leaps and selling the 140 puts. His break even on the trade is about $153.50. The puts were outrageously expensive, so I sold them. I love finding option pricing inefficiencies. Leaps were quite cheap. So a lot of times people ask, why did he sell the 140s and buy the 150s? Or why did he sell the 150s and buy the 140s? Why not both of them done at the money? And oftentimes he'll see a pricing inefficiency that makes it worthwhile to move the strike up one or down one on either the put or the call option. In this case, he moved it down. So he's going to use a little less collateral to secure the puts, but he got just about as much for them as he would have for the 150 puts without having to collateralize an additional $1,000. That is probably why he did it, and especially because of that pricing inefficiency that he mentions. This is the chart that Invest Answer shared. You'll see it's a 4-hour chart with circle showing the confluence model, ATR, and IA optimized trend. He put, again, and I quoted at the bottom, IADSS on the 4-hour chart was golden so far. Stock was 156 at the time. OT was about to turn up. A buy signal flashing on the 4-hour. MR also bottomed. Mean reversion. And again, buy to open, BTO means buy to open, STO means sell to open, and that's a picture of the trade itself. What do I see on the chart? My chart looks just slightly different than Invest Answers, but by the time I put this chart together, which is this morning, he put the trade on yesterday. I put this chart together this morning. The buy signal had already turned solid green. So you see that little faint triangle yesterday, where it was trying to print a buy signal. That's what James showed on his chart back here, trying to print a buy signal. By the time it rolled around, the buy signal actually printed. You'll notice that the mean reversion printed almost 2 standard deviations at the bottom. It was out of the bottom of the or near the bottom of the confluence clouds. Note, I do put the confluence on twice. It's something I've been doing for 3 years. I was the one that came up with this 3 years ago, and it creates zones. An upper zone where all you're ever going to get is a sell signal, a middle zone, which is a do nothing, and a lower zone, which is a buy area. And all you'll ever get down in the buy area are buy signals. Okay, so that's why mine looks different. You'll note his has one singular cloud in the background, and then the orange and bluish clouds, those are his ATR model. Not something I use as much. It works great. It's just not something that I have in my repertoire. Instead, I use the confluence cloud turned on twice, and I really feel like I get a good visualization of when it's outside the norms. That's what you're looking for in trading. You're looking for those asymmetries. And so right here, and again, the trend's about to flip. I use the regular trend instead of the optimized. Both of them work famously well. So again, it becomes your personal choice. But on the chart, this one, bang. It looks like Invest Answers nailed this thing yesterday from what I see so far. So the trade, he sold the January 15th, 2027 Circle 140 put for $40 a share, or collected $4,000. He needs $14,000 to collateralize the put due to assignment risk. This can be cash or this can be margin. And again, $14,000 because the 140 put times 100 shares is $14,000. If the opposing party decided to put or assign their shares to James, he would have to come up with $14,000 to buy their shares. When selling puts, you're agreeing to buy 100 shares at $140 a share in this particular case. Invest Answers also bought the January 15th, 2027 Circle 150 call for $43.50, $43.50. There is a typo that I see right there. It should say he spent $4,350. Excuse me for the typo. So that should say he spent $4,350. This part is correct. It resulted in a net debit of $3.50 a share, or $350. He also said that he spent a $3 to $4 net debit. So I took the average, which was in the middle of $350. Also, when he said his break even was $153.50 by January 15, 2027, that clued me in that when he said $3 to $4 net debit, that it was somewhere right there in the middle, okay? And 150, the strike price of the call, plus 350, the net debit that he spent on this trade, equals 150, 350. That's where you get the break-even pricing. What's the biggest risk? The biggest risk is that Circle goes to zero and you're assigned shares at $140 a share times 100 shares, and you got to cough up $14,000 that are worthless. Again, assuming it goes to zero. I highly doubt that would happen, but we have to talk about what are the biggest risks, and that is the assignment risk of shares that are either worth less than what you got them for, or they're worthless, meaning it goes to zero. In that particular case, it'd result in a loss of $14,000 plus the $350 that you spent up front, or $14,350. That is the absolute most you could lose on this trade. Again, I always build my trades on Optionstrat. You can go to optionstrat.com/GDinero. I'll also put the link in up above so that you can just click the link and be there in a heartbeat. I use it to visualize all my trades. It's amazing how many times I go into Optionstrat on a daily basis. So here's a long combo is what they're calling it. It's a synthetic long, but it's called a combo because they're not done. They're usually done at the money. So normally he would have done a 150, 150. Again, because of the pricing asymmetry, Invest Answers did a 150 call and a 140 put. What I put down on the range on the left-hand side, I noted that Circle had been up to 289.99. So it's been up to $298.99, or about $300, right? Close enough to 300. That would be that's the all-time high. That would be an 85% increase from where we are right now back up to that all-time high. In that particular case, the puts would expire worthless. It's well above the 140 level. He's not going to get assigned somebody's shares at 140. They're just going to go out and sell them on the open market at 300 instead. They bought a put that expired worthless for them. James sold a put and got to keep the entire, $4,000 that he got from selling the put. At $300 a share by January 15, 2027, this trade would equal $150 a share times 100 shares, or $15,000. He could walk away with $15,000. He spent $350 net debit on the trade, plus the put that he had to have some collateral there during the time that the trade was on. That means he turned $350 into a $14,650 profit, or a 42.9x return. I'm just going to call that a 43x return, hence the title of this video. Guys, if you want to see more content like this, make sure you like this video. Like it right now. Go ahead and comment below. What'd you learn? What'd you like best? What would you like to see more of? Subscribe to the channel so every time I go live, go ahead and click that notification, and you'll see that every single time I put up a new video, you'll be the first to know about it that way. That way you don't miss any of this content. Also, you can book a course with me over at gdenarocoaching.com. I teach courses on TradingView and technical analysis. Many of you really like the TA Tuesdays that I do every single week, where I really break down the charts on some of our favorites. And some of you have been telling me that it's really immersive training. You're taking the course, you're then doing a one-on-one with me, and then you're watching me do the TA Tuesdays every single week, and it's starting to sink in. That's the goal, guys, is to help you be able to do this on your own so that you don't rely on somebody else to find some of these opportunities for you. I also teach a course on understanding options. If a lot of what I said today didn't make sense to you, that's the place to start. Not with a one-on-one with me. Start with the Understanding Options course, because it lays the foundation from which we can start to build trades from. And finally, guys, remember, I'm G Denaro. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time.